Welcome, everybody. It seems like folks are still getting themselves signed in, but it looks like we've got Christian, we've got Brennan, our special guest today. We've got someone with a cool, maybe what is that, electron microscope of a MOF, maybe? I don't know what that is. Mark's background.
Yeah, it's the image you see anytime you see a video on biochar. It's biochar up close.
That's okay. Very cool. A lot of surface
That's
area.
cool.
We've got Brett. We've got.
I love a good porous medium.
Yeah, there you go.
Who doesn't? And we've got Nitin. Welcome back, Nitin.
Hey there. Good morning.
Good morning to you. Cool. Well, I'll start things off. I'm guessing a few more folks will join, but we've got our guest and man of the hour, Brennan Spilaki from patch.io on, and he's going to tell us about what he does. And I feel like I'm not even going to try to introduce what he's doing. I'm gonna let Brennan do all the talking. But it's a snippet of code or snippets of code that allow for people to offset or purchase carbon removal vis-a-vis point of purchase something or rather. So that's about as close as I can get. I'm gonna let Brennan go for it.
That's almost it. That's basically what I say too. That's you.
I'm hired. I'm your new business development guy.
That's it. Yeah, head of marketing right here. This is it. All right, great. Well, hello everyone. Thank you so much for having me. My name is Brennan. I'm one of the co-founders of Patch. I was thinking maybe I do have a deck, but maybe it makes sense to do like 2 or 3 minutes of background just so you know who you're talking to, and then I'm more than happy to dive into the business after. Does that make sense, Jeremy?
Yeah, let's do that, and then spend 15, 20 minutes, whatever you feel comfortable with, going through some slides, telling us what you do and what Patch does, and then we've got some questions teed up. We actually put some up ahead of time, and people upvoted a few, so we have
I read through those, so I have an idea of what to expect.
Okay, cool.
Awesome. So yeah, also, by the way, everyone, feel free just to chime in with questions as I go through. I don't really like orating and just like lecturing people. So as I go through the slides or through my background, feel free just hop in and interrupt me. I really don't mind at all. Really would love to have this be a little bit more of a dialogue than like a lecture. Awesome. So I'll go back all the way to university to give folks an idea of why I'm working in climate or why climate's important to me. So initially grew up in New York. I'm a dual citizen, so I studied chemical engineering at McGill, which is a university in Montreal, with the intention of working in renewable energy systems. So always wanted to work in climate. Thought it was going to be from like designing utility scale renewable energy systems. Ended up only getting jobs in oil and gas, which I did not want to do out in the tar sands. And so did a bit of a career pivot and became a programmer. I would then work at Shopify for a while and then join a small hospitality startup called Flatbook, which would then become known as Sonder. I had the great privilege of watching Sonder grow from about 15 employees when I first joined to about 1,500 when I left over 4 years. And they were also the folks that relocated me from Montreal out to San Francisco.
For those who don't know, and I'm one of them, Brendan, what does Sonder do?
Yes, so Sonder it's a hospitality company. So you can think of us as like a Marriott competitor or a Hilton competitor, but instead of having your like traditional standardized hotel rooms, we professionalize the operation of apartments. And instead of having a bunch of staff on site to help you with cooking or carrying your bags or bellhops or things like this, all that functionality is actually pushed into our mobile application, and all that's stripped down and actually opt-in. So the net result is you get a hotel grade experience from a cleanliness and management perspective, but the cost is significantly lower because you don't have to cover all that overhead associated with all the on-site staff. So to give you an idea, like the average hotel in the US has about 1 staff member per room or key in the unit. The average for Sonder is about 1 for every 20 to 30. So to give you an idea, like the cost structure is fundamentally different, primarily through software, as well as making everything opt-in as opposed to fully baked into the price. So that was super different than climate, right? Like I was primarily building software that helped run the operations and distribution side of the business. So a lot of APIs and things related to kind of managing physical problems. When it came time for me to leave Sonder, I've been there for 4 years and got to see that business grow, but it kind of felt like I was not as, I think, useful as I was in the early days. It was a 1,000+ person business. My co-founder and I, Aaron Grunfeld, decided to go out on our own and see if we could go 0 to 1 by ourselves. And we really wanted to use it as an opportunity to kind of get recentered back on climate. The good and bad thing about climate is we're not really on the right trajectory. And so every day that goes by, it becomes more urgent and more relevant. So it felt as good of a time to get back on track as before. And so I will hop in. I'll actually share my screen now.
I think I have to make
you disabled it.
Once.
Any questions now before we hop into some slides?
Yeah, Brennan, I have a question for you. So I find your pivot from chemical engineering to programming really interesting, especially in the climate space. It feels like there's a lot of people that are wanting chemical engineers. And so can you talk a little bit more about that decision?
Yeah, so I think the decision for me was all about what, well, I mean, in the short term, actually, like to be completely selfish, it was really like who was going to hire me and let me live like the life I wanted to live, truthfully. So the cool thing with programming and startups in general is it usually gets like move at your own pace. There's a little bit less, probably like red tape. So then associated with like if you worked at like a Schlumberger or something like that, right? You can actually like move a little bit more rapidly, but that also comes with its concerns if you're moving fast and breaking things. But I wanted the opportunity to really be able to be a little bit more autonomous. I didn't feel like I'd actually be able to get that through a more traditional engineering path. That coupled with the fact that I could not work on things, at least I didn't have the opportunity to work on things that mattered to me. So like I couldn't get the jobs at like a Nextera or whatever it might be. I was only able to get jobs at like P&G and like Exxon and things like that. And I just didn't want to do that. And so it also just came out of like, well, what do I want to work on? And the idea of like working as a programmer with helping, in this case, merchants, in the case of Shopify, was really compelling to me. And so that's kind of how I started down that path. Truthfully, I really did not have this like grand like 5-year plan where I was like, oh, I'm gonna like check this box and check that box. It was really a series of like just saying yes and being open to things. I kind of just ended up to where I was today, truthfully. It was not, when I was like 18, I was not planning this. It was not part of my master plan by any means. So that might not, I don't know, that might not align with some, here, let me just pull up my deck here, align with maybe some other founder stories of like, oh, I had this vision and like, this is what I wanted to do. But unfortunately, my life is a series of fortunate outcomes and a bit of serendipity and just being open-minded. Awesome.
More like real life there.
Yeah, well, yeah, it always kind of bugs me when it's like, oh, I went into like the forest, the desert, and like had this vision. Or it was at that moment I knew I had to spend the next 80 years of my life on this problem. It's just, I don't know, it's a bit contrived. Anyway, moving on. And so when we came to look back at the climate tech space, a lot had happened even in the 5 or 6 years I had not been focusing on it. But the overwhelming kind of theme that we saw was that we actually believe that fundamental kind of like climate change is actually going to be driven through business. And so that's like what I believe in and what Patch believes. And the reason is because primarily it's going to be businesses who feel this kind of like 3-sided pressure. And we're seeing a lot of this inflection point in the last like anywhere from like 12 to 24 months, where you have consumers being kind of hitting the saturation point of climate awareness. So, Inconvenient Truth was truthful, like although it was all very valid and the science was still there and the science for climate change has been around for a long time, it hasn't really permeated through popular culture as it has in like the last 2 or 3 years. I would say like a Greta Thunberg would not have been the force that she was 5, 10, 15 years ago. Second piece is there's actually beginning to be a bit of regulatory pressure, whether it's, the compliance market that's existed for a long time within Europe when it comes to carbon sequestration or carbon offsetting, or in California, we're seeing a lot of new regulations around like whether it's like freight or miles driven by ride sharing companies, but the number that has to be either EV or ZEVs on the road, which is that's kind of in progress. So a lot of regulatory pressure kind of coming around on businesses. And then finally, investor pressure. So at the end of the day, climate change is not good for long-term returns. So if you have the planet melting down, your commodities are going to go out the window. People are going to have less disposable income. Climate change is actually not good for business. And so you actually see folks like Larry Fink coming out and saying at the beginning of this year, we're going to start beginning to consider ESG and sustainability initiatives into our investment theses. Because if you're investing capital, in this case of these 3 firms, trillions of dollars, or with expecting a return over the next 10, 15, 20 years, climate change could actually materially actually move that. And so how do we make sure that we're kind of putting our dollars in the right place? And so, okay, we're at this inflection point where climate's actually becoming a little bit more important, and we believe that it's going to be businesses that drive a lot of the change, at least in the short term. We're going to be, at least if nothing else, held responsible for implementing a lot of the change. And then you have your two buckets of what you want to focus on. So there's reduction in zero emissions, whether that's decarbonizing the grid, finding new green ways to enable dispatchable energy, increased grid electrification of anything, and then the idea of carbon removal. So how do you take CO2 out of the air? When Aaron and I first came into the space, we felt like the former had a lot of power behind it. You know, you see like the cost of wind and solar basically going to zero. You see like really awesome companies like the Teslas of the world, like making sustainability cool from a reduction initiative, from like reducing our electric vehicle perspective. But at the end of the day, we have this massive backlog of CO2 in the atmosphere. And the residence time of CO2 and for like, you know, a portion of it is not that long, you know, 5, 10, 15 years, but for like the trailing tail of it, it can be 50 to 100 years. And so even if we stopped emitting today, the planet would still be heating up because we burned greenhouse gases the last 200 years, or excuse me, burned fossil fuels and emitted greenhouse gases the last 200 years. And so we really wanted to focus on carbon removal and carbon sequestration. And when you begin to focus on that, you happen upon the concept of a carbon offset fairly quickly. And you realize that there are two types of carbon offsets. There's the idea of avoided emissions, or even possibly renewable energy credits. That goes in the reduction bucket. So that's actually things that we're not focused on at all at Patch. And then there's the idea of afforestation or reforestation, of actually drawing down more CO2. And despite that, you realize that carbon markets are actually, for the most part, like fundamentally broken. And it's a two-sided problem. So on the demand side, you have, actually participating in the market is incredibly difficult. So, really the only companies that can afford to participate are the Microsofts and the Apples of the world, where they have the head count for it to hire a head of sustainability, or maybe a CSO or VP of sustainability, as well as a team of analysts underneath them to actually find the appropriate amount of carbon, being able to actually calculate the footprints of things like that. The supply chains are actually, for the most part, fairly opaque and low trust because of the traditional broker networks that exist out there today. So because brokers are taking commissions of anywhere from 30 or 40% on the price of the underlying derivative, they don't want to get cut out of the deal because they know they're fleecing you. And so they're kind of a little bit skittish about where actually the supply is coming from. So you get in this position where you're paying a lot of money for something where you might not actually particularly believe in it. And then at the end of it, and then finally, unless you're like a TerraPass where consumers are actually going directly to you, it's sometimes very difficult to actually drive customer engagement with a lot of these sustainability initiatives, where they're one of like the three stakeholders that are driving this change, right? So it's really hard to, how do we actually have consumers participate in some of these interactions? And then on the supply side, if you're actually a developer, so not a broker, so I'm not talking about brokers, but the actual person developing the land. So whether you're developing a biochar production facility or planting a forest and minting carbon offsets from it, your sales teams are typically pretty small. And so you typically have to go after large deals. And the problem with going after large deals is you basically don't go after any of the long tail, right? So everyone right now, there's actually this massive RFP going on right now where a lot of the suppliers on Patch are all going after Microsoft's RFP for their carbon, I believe it's net neutral initiative, when they're going to, I forget if it's 2030 or 2040, but everyone's bidding on that right now. And everyone's trying to get like, $500K, $1 million, $2 million out of Microsoft. And it basically means that they're skipping out on all of the $5,000, $10,000, $50,000 deals because the process to actually compete for those types of deals is so intense. The other piece is that it's incredibly, because you're going after these large deals, it's incredibly difficult to underwrite. And so, when you have an internal sales team, it's a little bit difficult to forecast, like, oh, when is the next like Fortune 100 or 500 company going to release an RFP that we can bid on? And if you are kind of taking the traditional project finance approach of developing land, when you have to secure debt and you have to underwrite what you're going to be generating, how you're going to be servicing that debt. And if it's this like super spiky contracting flow, it's actually incredibly difficult as opposed to something that's maybe a bit smoother. And then finally, there's just no back of office tooling for a lot of these systems. So in the case of carbon offsets, there are the registry systems, but those are a little bit Web 1.0, doesn't really drive efficiencies in the back office to actually run your business. And then in the case, if you're like a biochar direct air carbon capture operator, there's almost like no tooling. So you're either in like spreadsheets or an Airtable or something like that. And so this is kind of where Patch comes into play. So Patch is essentially a platform for negative emissions. And so what does that actually mean? On the demand side, that means we're an API that allows you to transact with negative emissions. And that's across any type of negative emission. So we have all the types listed, or some of the types listed here across mineralization, enhanced weathering, soil, carbon sequestration, biochar, etc. And what happens is suppliers can load all of their inventory into our system, and we make it serviceable or accessible via API to demand customers. And you can buy as little as 1 gram or as much as 1 ton, 2 ton, 10 tons, however much you want. And as you send
Brennan,
API requests.
I've got a question. When you say suppliers load their inventory, can you unpack that a little bit? Is that simply a dollar figure that has been committed to negative emissions when you say inventory?
And how do they coordinate that? And just to follow on, how do they coordinate that inventory with where else those presumably credits might be available?
Yeah, totally. So the idea here is there's a couple options on what that looks like, but essentially there's a dashboard where you can load all of your inventory in to Patch. Now, inventory in this case is actually massive carbon removal. So in the case of, say, carbon offsets, I'll anchor it in that example. You're actually loading in like your registry serial numbers, and each registry serial number represents a ton of CO2. And so that's what like the inventory in that particular case looks like. In the case of like a biochar, unless you're like, you won't have a serial number unless you're EBC certified or something like that, European Biochar Certificate certified. And you'll either have those numbers or you'll just have like an annual or quarterly capacity loaded into the system. And then when folks purchase from you, we allocate that capacity in the system. And then you either provide, it's either been fulfilled already, or you provide proof fulfillment if it's a future forward-looking capacity. Does that make sense?
Yeah, proof to the customer or proof to Patch, and who bears the legal responsibility for the legitimacy of that transfer?
Yeah, so the, sorry, when you say transfer, what do you mean there?
Sorry, I'm being sketchy with no video here. I guess it's like one of those video calls.
Welcome, Chris.
Howdy. Say I buy a credit. I'm on the sustainable business side here, and I'm buying a credit from a forestry credit that is registered with a program. Is a forestry producer providing that evidence to me, the sustainable business customer, or to Patch then to me? And relatedly, who bears the responsibility for the legitimacy of that transaction? Like if it's a fraudulent credit or a double counted credit, is Patch on the hook, et cetera?
Yeah, totally. Okay, totally understand now. So all the information will be loaded into Patch's system, and it'll be accessible to the purchaser. So on the demand side, you can access as much data or as little data as you want. So what's interesting is we've seen folks building applications, and I have a couple application slides beneath here in a moment, where some folks want to show no data to their customers, and they just want to know internally that what they're buying is legitimate, but they don't want it to be customer facing. And then there are some businesses like B2B SaaS businesses where they're building like a carbon accounting tool, for example, where they want to show all the data. So it's really up to the integrating party to decide what data gets shown, but Patch is responsible for capturing it all. And then as far as who's liable, Patch will guarantee when you spend money, we will allocate and ensure what you are paired with is legitimate. If we find out that it's illegitimate, we reserve the right to reallocate you to something that is legitimate at no cost to the purchaser. And then we'll basically, if there's like some sketchy behavior or there's some legal problem, we'll pursue appropriate legal action on the supply side.
Cool. Yeah. Thank you for being patient. And I know it's early days. I'm not trying to drag on.
No, totally. This is number one question that gets asked.
Cool, yeah.
It's,
Fellow entrepreneur, like trying to understand the details. Thank you.
Totally. No, it's great. I think it's great. Any others? Did that inspire anyone else or any other ideas?
Sorry, I'm just wondering, so I'm thinking about a carbon market like Nori and how they're only targeting like a single piece of the negative emission offsets market, which is soil in their case.
Yeah.
So I was wondering, like, it looks like you guys are going after the whole pie. And like, why do that? And what are the challenges there? And is that too wide a target to go for at the beginning?
Yeah, totally. That's a great question. So the reason we are going after the whole pie is kind of twofold. First, a lot of customers that you interact with. So this is on the demand side. So the supply side businesses, they actually don't. A lot of them don't want to allocate 100% of their funding to one particular project. Whether it's because they want to have a portfolio they can show off to their customers. Some view it as a risk perspective. So if you invest all of your capital into one project and that project goes under, it turns out there's some problem with it, then there's a concentration risk piece there. So as far as diversity, it's a massive value prop to the demand partners. And so while it is more difficult to do, it creates a lot more value for the people we're ultimately serving. So it's difficult, but it's like we don't view it as optional, truthfully. And then some of the difficulty that it provides, or it kind of brings up, is a lot of these technologies are not necessarily the systems and checks and balances aren't as built out as with forestry, for example. So like biochar specifically, we're seeing some stuff crop up again with EBC and a few other kind of things that are percolating behind the scenes in the US. But in the case of like direct air carbon capture, there is no like universal kind of standard. I think there's some like things that are kind of cropping up. Like there's a battle of standards sometimes and there's no like one de facto PDF yet of like, oh, this is how we actually do this. So kind of understanding what standards are legitimate and which ones are not is kind of a bit of a, I won't say struggle, but it's definitely like a bit of a headache that we do have to work through. And a lot of the times what we'll do is we'll work with folks. Like I'm a really big fan of what the people at Carbon Plan are doing. I don't know if there are any Carbon Plan folks on here, actually. Maybe. No.
I think so.
So like Jeremy Friedman, I think what he's doing is really great. And we really love that type of model because we think it's like a fundamental misalignment of incentives if we're both the demand channel as well as the verifying body, or like certifying body, depending on verify is I guess a little bit of a loaded term in this case. And so a lot of the times where we're not sure about something, we'll actually send our kind of the information we have to say a Carbon Plan or some other third party where they're actually publishing all of those reports publicly. And we can rely on them to be this neutral third party to say like, oh, this is legitimate, this is illegitimate, these are the strengths and weaknesses. And then that way we feel a little bit more confident listening to supply. So again, very early days still, but this is how we're thinking about it, where we really have to make sure we're partnering to verify. And that's really where the complexity comes in because the skill set you need for each one of these buckets is actually quite different. And there's no way we can insource that. And as well as we don't think it's appropriate to insource it. Cool. Awesome. And so really at the end of the day, what Patch is at its core, and I'll actually pull up our website just to show you a quick code snippet because we have some here. So at the end of the day, you have this system where you can write basically like 4 or 5 lines of code and start transacting with negative emissions. And whether that's direct air carbon capture, forestry, enhanced weathering, any of these things, it's the same interface. And depending on what your settings within our system are, we'll actually route you to the appropriate supply. And so, okay, now we have these 5, 6 lines of code that you copy and paste. What can you actually do with that? Well, it unlocks a whole suite of new climate positive products that can be built. Whether it's the opportunity to have carbon neutral or climate positive last mile delivery or ride sharing. We're actually working with a few fintechs right now to roll out carbon neutral credit cards. This is not a real application. This is like our mock or like kind of example app, but there are some folks that actually, it's going to be showing the impact of each transaction. And then as each transaction comes in, that number actually gets pushed into Patch's system, as well as a bunch of other things related like freight brokerages, e-commerce platforms, Those are really like our three kind of main go-to-markets, which is freight, e-commerce, and fintech. But you could obviously imagine the applications for like plugging into manufacturing ERPs to create carbon neutral products to offset the effect of like embedded carbon in products, or travel or anything like that. The one thing to keep in mind, and this is something that we really try hammering home with customers, and I want to hammer home here as well, is that the intention of patch is not to be like a get out of jail free card here. And that the idea is this kind of functionality, the idea of procuring negative emissions, is something that if you go across all the different companies that might be doing that, whether you're a technology company, a manufacturer, et cetera, the process is actually fairly similar, which is why we're actually standardizing it and abstracting it through software. But this does not mean that you can't be focusing on reduction internally. The idea here, and like the kind of core value prop here, is if you want to operate your business sustainably, anyone that's working on procurement or anything having to do with carbon markets, refocus their efforts on reduction in-house and push this commoditized functionality out to patch. And because reduction is incredibly specific to your business, it's actually very hard to standardize or abstract that, right? Whether, like, depending on what your supply chain looks like, how your actual operations look like, it's actually incredibly bespoke, which is why a lot of folks use consultants to do that, versus software is really great for abstracting and generalizing things, which we view the transacting with negative emissions as fairly standardizable, versus reduction, which we believe to be far more complex. And we'd rather companies spend their time on that and push all of this other still valuable work out to patch. So that's like the one thing I'll say there. And then finally, these are a few screenshots of the product. So in here, this gives you an idea of, you can actually like peruse and shop almost within the platform, and actually set, you'll see here, you can actually set your preferences. So if you, going back to how you want your capital to be routed, you can set 2, 3 preferences, whatever you like. And then at each API call you make, it'll actually route to that particular project behind the scenes. And if you want no preferences, we'll actually just route you to the least expensive one to start. And then finally, you also have the ability to purchase in-app as well. So the idea here is, I'm pretty sure this is one of the few places you can go online, make an account, and like buy like 10 tons of like biochar in like 30 seconds. And you can just like come in here, sign in with Google, throw in your credit card, and like just start buying across like all of patch essentially. And like no one can stop you, and it's incredibly quick to get up and running. And so going back to the low overhead and high activation energy to participate, we believe that we've really dramatically reduced the activation energy to actually participate in carbon markets. That's all I got. That's the product. Happy to dive into more product stuff, or
Brennan,
other questions.
I've got a question. I think the last statement you made, something like we dramatically reduce the friction to participate in negative carbon markets, something to that effect. Yeah. Let's just kind of revisit that. And I'm guessing you've probably done an exercise like this, but I would love to hear like maybe your 5-word or less, like just one sentence. What does patch do? And then maybe more of like the elevator, like give me the 30-second version of that, just to really distill this down. What problem are you solving, or what does patch do? Which they might be the same thing.
Yeah, totally. So I usually have more than 5 words to describe patch. That's a good one. I think the 4 or 5 word kind of description of patch, we do like this API or platform for negative emissions. It is a little bit ambiguous what API or platform actually means in this case. So the 4 or 5 words might actually be, we democratize access to negative emissions, where it's very easy for anyone to actually participate. And then the elevator pitch would really be diving into like the 2 or 3 problems that this human facilitated marketplace right now, like the problems that this is happening, right? So whenever you have humans facilitating interactions, in this case, it's typically brokers, there's always going to be value loss. There's always going to be inefficiencies to matching appropriate supply to appropriate demand. And there's always going to be time to get up and running, because the broker is always collecting requirements and whatever else. And so you basically strip down all of this, and it makes it so that participating is not that hard, right? Everyone has capacity, and you have willingness, and you just need a place where people can match and meet one another. And when you participate with humans, that takes time. You have to send emails or whatever else. And in this case, it's just a simple software solution. So I think that'd probably be my 2 or 3.
It's a technology facilitated marketplace. Obviously, you guys need to make a buck. Where you said retail providers sometimes are putting a 40% markup on things. You've got brokers, which then adds additional cost to the end user. Where if you can, like, how do you guys make money? Where are your margins inserted?
Totally. So the way we make money is it's all on the demand side. So we don't charge suppliers anything. And what we do is we charge a fixed fee per ton of CO2 purchased through the system, regardless of the underlying price of the derivative. And so if you buy a ton of forestry, $10 a ton, it's the same cost as if you buy a ton of direct air carbon capture at $500 a ton. And the idea there is we want to make sure that we're still running a healthy business. We can still make money, but the thing that's interesting there is that it's 2 things from an incentives perspective. We're always thinking about how do we align incentives to make it work out for everyone. The first is we're incentivized to go after the biggest emitters, as opposed to the maybe people with like the largest budget per ton. And so how do we make money by compensating the most carbon versus selling like the most expensive thing? And the second piece is how do we not penalize people for moving up market? So traditionally, the more expensive the cost per ton of carbon, the more effective the sequestration technique is, right? So forestry, typically $7 to $10 a ton, great natural way to take CO2 out of the air. Also great fuel. Who's Brett? I mean, he's got the aftermath right there in his background. This is what happens when you store carbon in wood. It can light on fire sometimes.
I think this was yesterday or the day before.
Yeah, it's a disaster, right? And then as opposed to say like direct air carbon capture, where certainly like from an efficiency perspective, far less efficient, but can stay out of the air for 1,000+ years. That's really interesting. We don't want to be taking an extra cut because someone's making a good decision by going with a more permanent form of sequestration. Same thing applies for enhanced mothering, biochar, et cetera. And so it's a fixed fee per ton, starts at $5, and then quickly goes down to about 50 cents per ton if you're doing more than 10,000 tons per month, which we have like 1 or 2 customers that kind of fall in that range. And so like classic volume-based pricing, and there's no SaaS fee right now. So it's really just, turn it on. If you buy 1 ton, you just pay for what you pay for, or pay for what you use, excuse me. The other piece to call out is that we try always removing on the supply side as many layers as possible from the actual landowners and developers. And so always trying to get that lowest price possible and exposing that to the user. And so not working with like a reseller or a broker or a retailer, always finding who's actually operating this project and how do we work with them to load the supply into our system. And that way, again, going back to the value loss, we want those prices to be low. At the end of the day, carbon is, once you're within the same tranche, is a commodity. And so the way you win in the commodities game is distribution and price for them a lot of the times. And so how do we make sure that we get there and drive that price as low as possible?
Sorry, go ahead.
Okay, could you just walk me through the process if like I'm a farmer running a regenerative agriculture based system to sequester carbon and I want to participate in Patch as a supplier? Like what goes on? How do I become a part of the market?
Yeah, so we actually haven't seen, what's interesting with regenerative ag is we actually haven't seen any projects that we like yet with regenerative agriculture. So that might not be the best example for us, but I can still walk you through it. Which is, so the first and foremost, we don't have like a standard onboarding process. So it usually means it's either an inbound lead or we're actually reaching out to you directly. So usually corresponding via email. The first thing we have to understand is like, where are you distributing right now, if at all? What does your LCA look like? So who performed the LCA and how do we know that what you're doing is appropriate? And then how are you going to provide proof of fulfillment? So in the case of fulfillment, sometimes it's production logs. In the case of like biochar or something like that. In the case of forestry, that's the actual registry numbers or serial numbers. So depending on what that is, because we're still fairly early, we're still a little bit like figuring it out with each specific type. So we actually haven't onboarded any soil providers yet. We're not doing that for the next couple of months. So to give you an idea there. But the biggest thing is who performed the LCA and how permanent is that carbon to stay out of the air. So our benchmark that we're typically going for, which we make an exemption for forestry, because it is so prominent, is usually 100 years. And so we haven't actually found very many soil opportunities where there is like proof that this carbon will not enter the atmosphere for 100 years when you do that. I've only seen like 10, 15, 20 years. And for me, like that's just not sufficient in my opinion. And so we're not actually onboarding that type of supply onto the platform. But at a high level, it's really evaluating supply. What does that look like? And then understanding what does your capacity look like per year. So we'll usually let folks load capacity up to 3 years into the future, and then actually allow them to generate pre-sales for that. And then again, going back to the rerouting. So we're always trying to make sure we have 3 or 4 types of a specific supply type on the platform. So if you're unable to fulfill a certain amount of that capacity, because we hold the capital in escrow, we actually don't pay it out until you provide evidence of fulfillment. We can actually reroute that capital somewhere else, because it's all in the software system and it's all in one escrow account. And so if you don't hold up your end of the deal, you reroute it somewhere else, but we'll always show you what your balance is. And so if you need to like get a loan or do whatever you have to do, you can always bring that to the bank and say, hey, I have, you know, 100 grand waiting here. I need $50,000 to be able to like access this 100 grand because I need to buy another tractor, or I need to buy another piece of equipment, or whatever it might be. And so that's been really compelling for a lot of folks to also unlock new debt. But unless you can fulfill it, we're pretty rigorous on being able to fulfill, as well as the proof that the carbon will stay out of the air for a really meaningful amount of time.
Great.
If you believe in the quality of that carbon on your platform, do you have any interest in lending against it to suppliers?
So not to give too much of the master plan away, but that is on the radar, especially when we have a meaningful amount of supply on the platform. We'll actually understand like how, because when you integrate with a bunch of different platforms, so we're working with a bunch of e-commerce and fintechs primarily, you're gonna have this really nice smooth curve of demand for each type of supply on the platform. And then if you have a couple of suppliers, you have a little bit of a supply curve. And so it actually makes that underwriting process a little bit easier. Now, whether we would actually lend against it versus like sourcing debt to have someone else do it, I think that we haven't really figured that out yet. That's more of like a 2022 to 2023 idea for us.
Can I say something I only half agree with and get your
Sure.
response? So is carbon a commodity? No, because there's enormous price variation. Part of that price variation, as you point out, is permanence, additionality. A big part of it is also brand and like marketability, right? If I can talk about like saving the orangutans as Microsoft, I'm a heck of a lot more interested in that than like, you know, I burn methane in the Arctic. Like who cares about that? How do you think about like your role in that equation? Like, and another way of asking the question is, all that margin for middlemen and middlewomen as brokers is there for a reason. How do you believe you can make those connections without as much hand-holding as that like marketing value differentiation requires, granted that that's a significant part of the voluntary market?
Yeah. So the one thing that makes, so I would assert a couple things. First, like price inequality is driven by, again, going back to once you're within the same tranche of carbon. So once you're within like the same, like I would assert like all DAC, for example, is like a commodity where it's all like the same amount of permanence, the same amount of like additionality or verifiability of the additionality, things like that. So once you're within that tranche, there should not be a massive price disparity. And if there is, it's probably a reason with your underlying operations, and a lot of folks think they can like charge a premium because their OPEX is higher, when in actuality they might just not be running an efficient business. Right. And so any disparity is usually a cause of an inefficient market, because like supply and demand aren't actually finding one another because it's difficult to compare, or there's no like aggregation of where all the demand is. So like that's kind of like my initial thought there, which is some of this price inequality is driven by the fact that there's no like one central hub to compare it, or there's not like 1 or 2 hubs to compare it. Going back to saving the orangutans, this is something we grapple with a lot, because people love that. Like people love the co-benefits of things, especially when it comes to like soil and farming, where it actually might not be the more permanent way of taking CO2 out of the air, but it's like, oh, well, if I'm helping farmers, like this is a really awesome, like I feel good about myself. But this is more of like, I view this as more of like the purpose of Patch is not to be like a jobs program. The purpose of Patch is to take CO2 out of the air. And so truthfully, I'm not sure we really know on what the kind of where all of the kind of, what's the expression, like where the domino is going to land, or like what the final outcome is going to be, because marketing is going to be a big piece of it. But for us, what we're trying to do is standardize all the information so you can actually truly compare apples to apples. So you can say, okay, I have my forest that saves orangutans and my biochar provider, and you basically see all the permanence numbers. And what we're actually playing with the idea of is not just saying price per ton, but price per ton per year stored, and actually normalizing for, okay, well, if you actually look at like one of these more permanent forms of way of storing CO2, not just per ton, but for how long that ton stays out of the air, it's like, oh, wait, well, biochar actually makes a lot of sense, or DAC makes a lot of sense. Like this tree nonsense or soil stuff that might not actually make sense for me. But so then it's all about weighing, what does the purchaser value the most? Do they value the permanence, or do they value being able to let their customers know, hey, I saved these orangutans in addition to planting some trees?
Right.
And there are folks that value that more.
So long as you can also maintain your independence and credibility as the middleware, because otherwise, like, all of a sudden, you know, my DAC just went from 500 years.
Okay, start getting ready. I'll come in 2 minutes.
Rohit will be there in 2 minutes.
Oh, shit.
Sorry.
It's all good.
No worries. That's 2020. You know.
No worries, Rohit. I'm gonna mute you.
But
We're all trying
Brennan,
to survive here.
you know, you see my point about the like validity and legitimacy, because all of a sudden, if my attractiveness on a per credit basis is based on a number that I, as the supplier, you know, provide to you, I'm going to find a way to like stack rank to the top of that list, unless there's some sort of independent authority evaluating those claims.
Absolutely. Which is why the kind of bringing in like the carbon plans or the verifiers of the world is so important. And that's why we're actually releasing this in about a week, but we have this project detail page where we like show like the 4 like largest numbers we had. It's like permanence, additionality, et cetera, like super large to the top right next to the price. So it's like, there is no confusion. The reason this costs $10 per ton versus like 500 is because this is literally a tenth as effective.
Yeah, totally.
And so just really making sure that it's clear, because we also don't want to be in charge of or responsible for showing preferences for the supply, because then again, going back to the incentive alignment piece, you can get into this weird dynamic where if we're like best friends with the forestry people, the DAC people, then there's this trust piece. So we have to make sure we're incredibly rigorous with how we like display the information, and make sure we're really science and fact driven versus feeling driven.
To that end, are you also kind of the Morningstar of credit? Like ignoring all of Morningstar's like total moral depravity for exactly the reasons you just described?
So I haven't heard of that company. What is Morningstar?
They rate bonds.
They rate bonds. So that's interesting. So we have gone back and forth on like who's like the Moody's for credit. And it kind of feels like the stock exchange should not be rating the credit or rating the stocks. And so I would assert that does not make sense. I think it could be a good business for us, but I actually don't think from an incentive alignment perspective it makes sense.
Yeah.
Can I use this as a segue to our most highly upvoted question here? So from your vantage point at the intersection of tech and carbon removal, you know, in the business that I do, I think of other things that I could easily distract me. Oh, there's another business that could sort of jump off the side of this. And there's another thing. I'm guessing you've got many of those that sort of come and go and you just have to stay focused. But what other opportunities are you seeing sort of in this world that you exist and operate in that you're interested in or watching, or maybe just throw out a couple ideas that you're like, here's something that could support our business, but it's a completely other business?
Yeah, so definitely that one, the rating agency or like the Patch would pay for that. If you build this and it like works well, like we would actually pay for this 100%. I will say that right now on the record. We will, if you're building this, please send me an email. Brennan at usepatch.com. Please send me an email. What else? I actually had one or two of these written down, but I don't know where that piece of paper was. So there's definitely that piece. I think there is also a lot to be done still on how do you make it easier to launch more credible supply. So right now, how do you make it easier to gain access to capital, whether it's like through demand aggregation or the financing piece? Like that could be its own thing in general. The idea we've played with is how do you get like people upside for selling these derivatives? So like what does like a carbon ETF look like? Or what does actually probably closer like a carbon REIT instead of a carbon ETF? What does like that carbon REIT look like, where you actually pull a bunch of capital, maybe not from institutional investors, and actually invest it and actually gain some return there? I think that could be something really interesting. The thing that I've been going back and forth on a lot is how there are a lot of people building consumer applications right now, and we're powering several of them. What's really unclear is like what is truly going to win in that space. And I think whoever figures that, I think there's gonna be like one or two winners that actually truly make a lot of sense on the consumer side. I think the B2B SaaS thing, it's gonna always be fragmented because it's gonna be really like who has like the best sales teams and whoever can like push that on. But whoever can figure out the like virality associated with making sustainability like a status symbol, I think could be really, really interesting. I'm not a brand person, so that doesn't make sense to me. But like the same way that like being an angel investor in Silicon Valley has like this allure of like, oh, I have like excess wealth that I can like allocate to these like niche businesses. How do you actually make it so that, oh, I have excess wealth to like contribute to sustainability? And how do you frame that in a really interesting way? You know, Everlane and a lot of these other sustainable businesses wouldn't have been as successful as they were, as they are today 10 years ago, I would assert. So I think there's probably something there where you can actually align like clout or status with sustainability. If you can figure out that framing and marketing, I think that'd be really interesting. But I am not the right person about that. Oh my goodness, that is not me at all. I'm one of the least cool or marketing people in the world, so I wouldn't know how to do that.
Can I ask a slightly different question, Brennan?
Please.
Actually, as you were talking about this, and I think given your background, I could not but help think about Shopify.
Yeah.
And as Shopify actually democratized e-commerce for SMBs in the world of Amazons of the world, right? And everybody had a front store with 5 lines of code, and they were off to the races doing whatever they were doing from their homes. As you were like, showing the snippet of code and talking about your business model, I'm just curious, what learnings from Shopify are applicable in this space or not? Because I think there are quite a few I could think of, including some examples which were brought up, like there could be just API plugins or apps on this platform to add more value. But I'd be curious to get your thoughts around like, hey, from Shopify, quote unquote experiences on Patch for carbon markets, these things could be applicable and they might not be.
Totally. So the biggest thing that I've learned from my brief time at Shopify was if you drive, like there's this like fundamentally difficult thing that has a lure. So in this case, it's starting a business, or it could be either starting a carbon removal business or actually becoming sustainable. But what Shopify did that was really cool about entrepreneurship or starting online businesses, they really drove, again, going back, not to belabor the activation energy piece, down to like incredibly low, where you could create an account and actually walks you through how to think about inventory, how to create a brand, how to get a logo, secure financing. They have all these sweet tools built into one place where in like an afternoon, you could actually figure out how to like stand up a, several $1,000s per month e-commerce business. And that is just like totally mind blowing to me. And what's interesting is how it becomes very difficult when you do that to understand and forecast what the opportunity is, because it's actually market making versus capturing a market. Now they're doing capturing the market with like Shopify Plus, where you're actually porting over large brands that existed before onto their platform. But where a lot of their like early money was enabling people to start businesses that were not doing business before at all. So it's just making the pie bigger. And this is something that we're really trying to do. So when people say, well, the voluntary carbon offset market is only in the US is only like 300 million a year, it's like, yes, but it's still growing despite all the things that are messed up with it. And the idea is that if you drive that activation energy incredibly low and make it incredibly accessible, there's an opportunity to make the market or make the pie much larger. So this is definitely the key learning that we're taking from and really trying to apply it to carbon. Now, whether it's going to work, I wouldn't be working on this day and night if I didn't believe that, but the book has not been written yet, right? We're still in like the pre-log right now. So
yeah.
So where exactly are we in the evolution of Patch? Are you, obviously it's a young company, but how young? I assume you have customers active at this point, but it seems like you've got a whole lot more in the works. You're very, very early stage, but where would you describe Patch's evolution at this point?
Yeah, so we're definitely in the, I forget what it is. I'm trying to remember like the LinkedIn term, but we're in the first one where we're like a 6-7 person company. It's like a little I think it's called family. So we're in the family stage, and we're I think at the cusp of figuring out like our first version of product market fit. So we're almost there. So product market fit's not really, we don't view it as a destination. It's kind of more of like a state. And we're almost at our first version of that state where we have like a pretty big funnel where we've got like 200 companies in the funnel, all kind of moving through it fairly quickly. Everyone's taking our first, second, third conversations. We have supply on the platform. We have some people integrating who are going to be going live and we can announce in about 4 to 6 weeks. So like there's something happening, right? We're not dead on arrival by any means. That being said, once we get through the next 6 months of all these onboarding, it's going to be like, well, can we actually take it to be like a, not to be too in like venture terms, but like a letter round company. So can we be like a Series A company? We were doing like 5-10 million a year in revenue. I believe we can get there, but we're just kind of entering our first kind of inflection point, I believe. And we're gonna get up here. We're gonna level off. So we're gonna have to change something. We're gonna have to either move up market or something like that. But we're just about to go up our first kind of step right now.
Okay.
So
we
raised a bit of financing, and we have like a great initial engineering team and sales team. But yeah, only 5 months into it right now. So we started April 1st.
Sorry, can I say something, Brendan?
Please.
You can hear me. Okay, so no, good stuff. Sorry, I missed the first few minutes. I'm on kids duty.
Of course.
So a couple of things. So it reminds me a little bit of getting a futures exchange up and running in the energy space. So I've done a bit of work on crude oil exchanges in Asia, in the Middle East, etc. And a guy who sat next to me for quite a while helped get Intercontinental Exchange ICE up and running when that first started. And there's different models there. I think for a lot of the crude oil exchanges, you basically just try and get all the main guys in the market at that point in time around a table and said, if you can use us, it just builds momentum. That's a very common model. But ICE did it slightly differently, and it just went to all the big players and said, we'll give you a share of the exchange. And if the exchange does well, then you can sell those shares at some point in time as well. And that, I think, was very attractive for a lot of those guys. And, people like BP, Shell, Vitol, Glencore, all those guys may have actually participated in that from memory. And that's another model to get a lot of early interest and just to make sure that people use your thing. So there's some parallels there in terms of how people actually get off the ground. And once you're off the ground, obviously, as you know, it's hopefully a bit easier once you've got momentum. I actually think I agree with a lot of what you've said. And I think for 5 months, you've done an awful lot of very good quality thinking. I think we're going to get to a stage where people are not going to buy each other Christmas presents and birthday gifts and things. If you can say, or you can create a situation where you say, you are now owner of a tree or a set of trees or whatever it is in some part of the world, and there's a blockchain verification, this, that, the other. I think we're going to move to that level. More and more people are, I think, in a post-COVID world, they're not going to just waste money buying gifts for people, especially maybe, under 25-year-olds kind of thing. I think they'd say, yeah, I'm happy to have a bunch of trees or an animal or whatever. That's what I want to sponsor. So I think the groundswell amongst younger people to actually create a pool of, demand for this, I think is something that we can't really imagine today, I think is one level. I think the last thing is around conflicts of interest. You might have a lot of different things you can do, but I think you can't do, sorry, I've got one more point, I've got a fourth point. You can't do too many things. You can't have a conflict of interest because then people start getting suspicious and it just takes away almost the merit in the platform. So just do one thing, do it very well. And if, other people want to do other stuff, fine, let them do it. And also in oil and gas and all these sorts of things, there's a bunch of independent people like SGS. There's quite a few guys like that. It's a very good business to be in. And they just do independent inspections. So the more you can ally with people around the world who say, at a reasonably low cost, we can absolutely verify that, what is happening on the ground is happening on the ground. And tree planted today is not firewood in 3 years' time. Then I think you need those sorts of guys around you as well to build confidence. But then I think people will actually say, okay, yeah, why waste money buying something that somebody may not wear? I can actually give them a much better gift.
Yeah, it's interesting. I remember because I have a few friends that have gotten like those Terra Pass, like carbon credit cards or gift cards and things like this. Truthfully, I actually I'm a fairly optimistic person, but not necessarily optimistic in consumer behavior traditionally. And I actually think the idea of, it going back to the status idea that I was making before, I think there actually needs to be reframing. And so less around owning a plot of land personally, and rather around how do I, quite frankly, make myself seem better than someone else by operating like this? Now, is everyone operating like that? Absolutely not. But I have a difficult time seeing people forgoing their disposable income if it doesn't get them either like a new experience or a new place in society or a new item. Like, I think the idea of altruism, like there's always going to be that grassroots group of folks that work at nonprofits or NGOs always fighting the good fight. But I think to get to like gigaton scale carbon sequestration, you need to tap into something a little bit more primal. And I don't know, I wouldn't want to, we got like 15, 20 years to figure this out. I would not want to wait for whatever generation is going to be born to become, like to like opt into this idea, truthfully. I think the thing that's actually super fascinating though is that thing you mentioned about the marketplace and actually giving equity to suppliers. I think that's really fascinating. Definitely gonna drill down on that one.
So we need the Kardashians to start bragging about being carbon negative.
You 100%. We need we need like that to be on like Patreon. We need it to be on like OnlyFans. We need it to be on like every like creator network. I think that's the way to kind of tap into this.
You're talking about a new level of conspicuous consumption.
Yeah.
It's an altruistic conspicuous consumer.
Well, what's really interesting is we're actually, one of the credit cards we're working with, I won't share their name, but they're actually, the approach they're taking is it's a carbon neutral credit card, but they're actually charging a lot for the monthly fee. And they're actually going after like the Amex Platinum, but framing it as like, I can afford to do this and be sustainable. And so they're kind of doing one of the first opportunities to do the like status play associated with sustainability. And if you think about it, like if you're thinking about from an 80-20 perspective, that might actually make sense, right? Where it's like we don't need everyone to be like the most sustainable people. We need the biggest emitters to be. And so, if you look at like the super wealthy folks, those are the ones with like the carbon footprints per year of like 50 tons per year. Like we don't need folks who do like, a ton a year to be like super sustainable, at least in the short term.
I think to echo some of what Rohit said, I think partnerships are going to be key. I think keeping focus and making it focusing what you're trying to do. You're doing a lot, tremendous amount. I think you need to figure out what's the real thing you need to be focused on right now. And I think partners are going to really help you scale.
Definitely, certainly. All right. I actually have a hard stop, unfortunately, so I think I got to hop off here.
Yeah, I was just going to say we're at the top of the hour. So, Brennan, we very much appreciate your time. Thank you so much for coming on and spending your time with us today.
I want to say thank you to Jack, who's just joined.
And Jack, nice to see you, and we'll see you next week.
Oh, am I late?
Can we do it again?
I got the wrong time. Sorry, guys.
Awesome. Thanks again, Brennan. Appreciate you. And we'll continue this conversation in the Slack channel. If anybody wants to keep chatting, I'll put my normal notes up there, and we'll see y'all next week.
Thank you so much.
Quick plug. If you want to use Patch, we're in private beta. Shoot me an email at brennan@usepatch.com. We're also hiring a growth marketer. So if you want to work in growth and work with Patch, shoot me a note as well on Slack or on email or whatever else. All right. Awesome. Thanks, folks.
Thank you.
Thank you.
Thanks for your time. Have a great weekend.